What's going on, everybody? Welcome back to a new video on Investing Society. Now today we're going to be talking about Eros Now, also known as ESGC as the ticker. Now I've been an investor on ESGC for about maybe a year or two. Now we've just been downtrending. If you could see the Webull chart, let me pull that up right quick. So it's been on a heavily downtrend. Let me switch that for you guys. So okay, so it's been on a heavy downtrend for the past since when was this? 2015. So 2015, it's been on a big downtrend. So it peaked at where is this? Around $40, and then ever since then it's just been on a heavy downtrend. Now with this falling knife, would this be an investable stock? Now in my opinion it's not, and here's the reason why I actually bought. Now there's a lot of pros and cons with this stock, and there's a reason why I've been losing money on this stock, which everybody loses money, everybody makes money in the stock market. Everybody has to have a right person, everybody has to have a wrong person. So today, as a support, not today but before, the previous support was around, let me go back to the day frame. So 50.14. Today we hit 50. So we are bouncing back off support, but that does not mean it cannot break. So from 50 to 14, let me take this away. So from 50.14 right now, it's sitting around $50. I actually averaged down right here. My thesis on this is that it's gonna bounce back off support. Now I do have my stop loss at around 48 cents. If it breaks that, I am out, guys. I am officially out. I've been in this since it was $1. Averaged down my price down to, I started at around $1.60. I averaged down to $1, and things are just not looking good for ESGC. Now let's take a look at what happened today. So ESGC enters into exclusive negotiations for the sale of its STX Entertainment. Now what does that mean for investors? So because of ESGC's debt, it's looking for a sell-off. Now that is a bad thing for investors in their eyes, just because this equals that if they don't get this sale at a good amount of money, higher than its debt, then they could go to bankruptcy and they'll just be at a bigger loss than they were before. But let's take a closer look at what they're saying on ESGC. So today announced entered into exclusive negotiations with a third party for the sale of STX Entertainment, during which the parties will conduct a mutual diligence and negotiate a definitive, I don't know why I can't talk, agreements. The company has engaged Lazard, I believe that's how you say it, as a financial advisor to assist in the sale process. There can be no assurance that the negotiations of any process will result in any transaction. The company does not intend to provide announcements or updates. See, now this is a heavily big problem for investors. It feels like ESGC is just manipulating its stock, its investors, just because it does not announce earnings. So let's take a look at their earnings. I believe their last earnings were, see right here for earnings, it's been on a straight downhill, right? Ever since 2018, it's just been on a downhill of its earnings. So they're looking pretty bad. They're just looking bad. So last earnings, I believe it was in July 2020. I'm not exactly sure if that's correctly estimated, but so on July 2020, they missed by 32 cents. So they've been missing for the past since 2019, and with this on a downhill trajectory, this is just not looking good for ESGC as an investor, just because they have to get this sale at a higher rate than their debt. And today I wanted to talk to you guys about the positives and the negatives of investing in ESGC. Now, let's take a look at the stock first before we get into future projections and what the stock's gonna hold as a company. Let's take a look at their stock and what investors are doing with it. So of course, again guys, we've been on a straight downhill, of course, since, again, when was this? 2015. So IPO date was when 2013, and then it shot up and then went down all the way to a support of around $6, went back up to $20, and now we're all the way down to 50 cents. Now, as an investor, does this intrigue you? Does this intrigue you? And if it does, why does that intrigue you? Just because it's falling and it's cheap from its original high price as a resistance at $40, that does not mean it can't get any cheaper. So let's say you buy right here at 16 and thinking that's gonna go back to 40. Well, guess what? Now it's at 14. You bought the dip, right? Then it goes to 10, and then you buy the dip, right? And then it goes to $1, right? And now we're sitting at 50 cents. So as an investor, I would not play this. This is high risk, high reward if it bounces off support right now and we get a good sale for STX Entertainment. And any good catalyst, any good news that happens with ESGC, it's just a bonus, right? But as an investor, I will not touch this. Of course, I'm touching this. Why? Because I'm just averaging down my price from $1, just because it bounced off a little at support. Now, of course, I have my stop loss at 48 cents in case it just drops below that support, and you know, I don't want to take a bigger loss than I should. And for me, guys, this stock, I'm thinking long term on it, but of course I'm not afraid to sell for a loss. So it has not triggered my stop loss yet, but if it does, I am out of this stock. And I'm not afraid to take loss. You guys should not be either. It's a learning experience. Everybody takes losses and everybody takes wins. Somebody has to win, somebody has to lose. So if it breaks support at around 48 to 45 cents, I will sell my complete amount of shares, which I have around 6,000 shares right now. And yeah, I'm not afraid to sell, guys. So again, guys, I will not touch this unless we get a confirmation of an uptrend. So what would be the uptrend for this? Let's see. So the uptrend would be breaking above $1. Because if you see right here, it went on an uptrend, but it couldn't break that dollar mark. And then it went down on a downtrend, and then it tried to pick back up to $1. It just couldn't break that. So around $1.20, $1.30, if that breaks, then I would, it could fall, it could be a false breakout, but I would maybe start a position. It's all up to you guys on taking that risk. But for me, I'm like I think about it long term. So for me, it does not matter if it's at 50 cents currently. But that's only because I bought in at around $1, and I'm just averaging down my price, and my prediction is it's gonna bounce off support, and with any good news, then it could bounce off that $1, and then it could start uptrending from here. But I could be wrong, guys, and I could be catching a falling knife. But again, I'm not afraid to take losses. So that is for this stock. If it breaks above $1.20, I will definitely keep that as a watch list, and if it breaks that, then good. And it doesn't mean you have to jump in right away. Maybe you want to catch the second breakout. It's all up to you guys, but I'm telling you guys what I'm doing. I think it's gonna bounce off support, but in case if it's horrible news and it just goes bankrupt, you know, I will take that loss and get hit in the face for a little bit and then jump into another stock that I have faith in. So that goes for the stock, right? Now let's talk about the pros and cons of the company. So again, we talked about the exclusive negotiation of STX Entertainment. Now, what I like about the stock, it's heavily Bollywood, right? I believe it's 100% Bollywood, maybe some Chinese. I think they're getting into the China market, more films to be from that side of the country, I guess. But it has 1.38 billion in population in 2020 in India. That's getting real close to China, which is 1.402 as a population in China, which if you think about the US population is only 329.5 million population in the US alone. And if we see Netflix market cap is around 304 billion, of course, because they're at the top of the streaming industry, right? But if we look at ESGC's market cap, we see that it's only, I don't think that's correct. I believe it's around 211 million as of today. So it's very cheap, right? But that does not mean it cannot get any cheaper. So it's around 211 million market cap compared to Netflix, which was 300 something million. Sorry guys, I forgot. But 304 billion. Okay, there you go. So it could ESGC could easily be the top Netflix of India, just with its resources, with its let me check out their reviews. So on the App Store, I believe you could see. Let me see if you could. I think it's Eros Now. My fault. No, you cannot. I don't think you could see it on the computer. Let me see if I put Eros Now app. Okay, there you go. So now looking at this, we have great reviews, a good amount of downloads for Eros Now subscription base. So I like to see if they're making other people happy, their customers. That's number one, right? If the customers are happy, of course there's always going to be bad reviews on any app, right? But as long as there's more happy customers than bad customers, that's a green flag, right? And then as of last year, their subscribers grew heavily during COVID. Of course it's going to slow down now, but that does not mean people are not going to stay with it and continue from there, keep growing from there. So video streaming platform Eros Now has said that it had 39.9 million total paid subscribers and 224 million registered users worldwide as of March 31, 2021, which that is of course the peak of the pandemic. This presents a 10.6 million net new paid subscribers addition since March 31st, 2020, an annual growth of 36.2%, which is great, right? Great. They're getting into more subscription-based model for their streaming service, so which is perfect. We don't know their exact numbers currently, just because they haven't released any update on what's happening. So as an investor, of course, that's gonna make you fear what's happening with the company. But what I see is getting past that fear. Let's see what other information I had for you guys. So let's see what analysts are saying. So on average, analysts have forecast that company revenue for the quarter will hit wait, what's this? Analyst ESGC. Okay. So it's expected to reach its quarterly earnings report March 31st, 2021. Of course, I think they extended that. Of course, we have not received any earnings. Analysts tracking ESGC have forecast the quarterly EPS to shrink by 0 per share this quarter, while the same analysts predict the annual EPS to hit negative 60 cents for the years 2021 and up to 6 cents for 2022. In the case of analysts, estimate an annual EPS growth of negative 277.80% for the year and 137.50 for the next year. Revisions to the company. Let's see what their analysts are saying about their predictions for the actual price target. Let's see here. Okay, revisions. Okay, so on the technical perspective front, indicators give ESGC a short-term outlook of 100% sell on average. Looking at the stock's medium-term indicators, that notice that averaging as 100% sell, while an average long-term indicators are currently assigning the stock as 100% sell. Of course, you know, ESGC has been on a downtrend, so that, you know, they're gonna say that, which, of course, you know, that's gonna happen. Here is a look at an average analyst rating for the stock as represented on a scale of $1 to $5, with the extremes of $1 to $5 suggesting the stock is a strong buy or a strong sell, respectively. Specifically, one analyst have assigned ESGC as a recommendation rating as follows: 0 rated as a hold, 1 advised buy, while 0 analysts assigned an overweight rating. 0 analysts have tagged the Eros SCG Global Corporation stock as underweight, which, you know, that is not great for ESGC, guys, of course. Taking a look at this article, it's saying ESGC, most analysts are saying 100% sell, but there's extremes that there's a chance that it hits $1 to $5. So that is some, in case that does happen, that is some great returns, big returns, right? From 50 cents all the way, let's say it's $2, $3, then that is a great return. But for the risk, that is a heavy risk, right? But again, this is basically my gamble. I would not recommend you guys to do this, especially if you're beginners, because this trade could easily fall, and I do have my stop loss because I am not afraid to lose that amount of money. But if you are, I will not take that risk. I think that is it about what happened today with ESGC. Now let's go back to Webull. So again, guys, just to conclude this video, if it doesn't break around $1.30 and starts signaling an uptrend, I will not get into this. Again, I did get into it because it bounced off support at the 50-cent mark. But if it breaks below that 48 to 45 cents, I will sell that. Sell all my shares and just take my loss and move on from there. But guys, this stock, big risk. Big risk. Let me put that in text. Big risk. Okay, what is it doing? What is this? Okay, never mind. Alright, let me put this in text. Alright. Big risk, high reward. Right here. Just because in case it decides to squeeze, which there's a chance, just imagine if it squeezes back to its regular highs. Now, of course, this is my gamble, guys. You guys, this is not recommending you to do this, but in case my average is around 80, no, not 80 cents. So let's say it goes back from this support level, which is around 50 cents, and it goes up to squeezes to its previous, not previous, but this is its years down the road highest resistance. That's a 6,500% increase. And in case Reddit, Wall Street Bets gets in on this and it squeezes up to that $40 mark, just like AMC. Now, I'm not saying this is a smart way of thinking. It has to show some value It has to show some value as the company, right? Never depend on any community, Discord, Wall Street bets to pump a stock for you, or you to jump on a train, because by the time you jump on the train, they're on another train and you just lose all your money. So that is my thesis on this stock, guys. Can it go up? Sure. Can it go down? Sure. It's all about how you see the company in the future. And what I see in the future, it has great reviews. It has a great idea as a company, building a Indian Bollywood streaming service. And so that's what I believe in the future. It has a small market cap, so it has a lot of potential to grow. But that does not mean, again, guys, I keep repeating this, it cannot get any lower. So alright, guys, that is my take on ESGC. I'll probably start talking more about different stocks. I want to talk about PaySafe as well. If you guys know that stock, if you guys want me to talk about it, I will do that in the comment down below if you guys want to see that. But anyways, guys, that is the end of today's video. If you guys liked it, make sure to give the video a like, subscribe for more videos, and I'll see you guys in the next video.